In recent months, US trade policies have been a roller coaster. Trump's massive tariff threats on April 2nd, which he called Liberation Day, created a huge wave of panic in the markets. But this wave turned into an unexpected negotiation storm. With the 90-day delay of tariffs on April 9th, the Trump team sat down at the table with the goal of 90 deals in 90 days. This period wasn't enough and was extended until August 1st. However, most of the deals are not yet finalized, and this deadline is expected to be extended again. So, what has Trump accomplished in this process? Is he really the winner? Let's take a closer look at the deals on the table and analyze in depth whether Trump is winning the trade wars. In the rest of our video, we'll see what's behind these deals, why countries have objected so much, and how Trump's strategy actually creates a dilemma. But first, to continue these kinds of analyses, don't forget to subscribe to our channel and like the video. Trump's strategy seems quite simple. Threaten with high tariffs, then extract concessions and slightly lower the tariffs. This tactic appears to be quite successful at first glance. Trump manages to get eye-catching concessions, and while the final tariff rates are lower than the levels he threatened, they are still much higher than previous rates. For example, he threatened a 50% tariff against the European Union, EU. In response to this threat, the EU Commission pledged to buy $750 billion worth of American energy products and invest $600 billion in the US over 3 years. The tariff rate was eventually lowered to 15%. However, this rate is much higher than the average 4% tariff the EU faced before Trump. This is why European leaders see this deal as a lose-lose situation. They are both facing higher tariffs and had to make costly commitments. So, was this strategy only applied to the EU? No. A similar scenario occurred with Japan. Japanese Prime Minister Shigeru Ishiba announced an agreement a day after the upper house elections, accepting increased rice imports from the US and a $550 billion investment in exchange for a 35% tariff threat. The final tariff was reduced to 15%. Again, a lose-lose situation for Japan. With the Philippines, there was a 20% tariff threat. With Indonesia, 32%. With Vietnam, 46%. And with the United Kingdom, 25%. Each country made significant concessions. For instance, Vietnam promised to prevent China's products from being routed through its territory to the US. The common theme in all these deals is eye-catching concessions and high tariffs. But is this strategy really as successful as it seems? The reality behind the scenes. Here is the lesser-known part of the story. Many of these eye-catching concessions may not actually happen as they appear. The European Commission stated that its pledges were merely statements of intent and that it lacks the legal authority to force private companies to buy from or invest in the US. Similarly, Japan's promise of a $550 billion investment is not an absolute figure as Trump claimed. Japan specified that this figure is a maximum ceiling and that only 2% would be real investment, with the remaining 98% coming in the form of loans or loan guarantees. What's even more interesting is that despite Vietnam and Indonesia's promises to reduce Chinese transshipments, the rerouting of Chinese goods to the US, there is no evidence that this has happened. Global data shows that both China's trade surplus and the US trade deficit continue to grow. This situation reveals a major contradiction in Trump's trade policy. On one hand, he wants to reduce the trade deficit, but on the other hand, he is forcing other countries to invest hundreds of billions of dollars. So, why is this a contradiction? Investment in a country strengthens its currency. A stronger dollar increases imports and decreases exports. In other words, these investments are actually deepening the trade deficit. Do you think this is a major strategic mistake? Or is it part of another plan? Share your thoughts in the comments. Another important point is the real reason why the US economy has been less affected by tariffs so far than expected. A large part of this is due to Trump's constant flip-flopping on tariffs. Most of the announced tariffs have not yet fully taken effect. This has led companies to believe that the tariffs will not be permanent, causing them to lower profit margins rather than raise prices. If the tariffs become permanent, inflation could suddenly spike. In other words, the current economic stability is hanging by a thread. Another detail to remember is that while the US growth rate is higher than that of its G7 peers, it is still lower than it was before Trump. This situation provides important clues about the long-term effects of the tariffs. The biggest gap in this entire story is China. While Trump has managed to bully most of his allies, he essentially lost his mini-trade war with China. The retaliatory tariffs that began after China responded to the Liberation Day tariffs went above 100%. China imposed restrictions on strategically important exports like rare earth minerals, forcing Trump into a trade truce. As a result, a 30% tariff was imposed on China, but China made no further concessions. So, even though Trump has pressured his allies, he has failed to solve the China problem, which is the biggest source of the US trade deficit. Without a deal with China, it is almost impossible for the US to correct its persistent trade imbalances. So, should Trump's strategy be interpreted as bullying friends and bowing to enemies? Or is all of this just the first step of a bigger plan? Our analysis on this topic will continue. In our next video, we will cover very important topics related to the global economy and the latest and most critical issues in the crypto world. To not miss that video, subscribe and turn on notifications. For now, goodbye.